Hello, everybody, and welcome to my preview of intermediate accounting. My name is Bennet Tchaikovsky. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only, and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2019 or 2020 now by Bennet Tchaikovsky, all rights reserved. Any distribution is strictly prohibited. Okay, so a little bit about me. I'm a full-time faculty member at Irvine Valley College. I have been a licensed California CPA since 1993, an attorney since 1997. I graduated from UC Santa Barbara as a business economics major. You do not need to be an accounting major to become a CPA. If you have a question about that, send me an email. And Southwestern Law School. I've been teaching financial accounting since the fall of 2013 and intermediate accounting since the fall of 2016. I worked as a chief financial officer for many different companies, as well as a board member. If you type Tchaikovsky in the SEC website, hopefully you won't see anything on the securities side, but you'll find me signing my life away. Okay, what is intermediate accounting? Well, in your lower division classes, more than likely, you either had one of two setups. You could have had 2 quarters of financial accounting. You could have had a semester of financial accounting, and then you probably either had a quarter or a semester of managerial accounting. So with intermediate, though, we take the financial accounting and we're expanding it to a full year of fun. Some schools do it in 2 quarters, which is insane. It should be a full year or 2 full semesters. There is a lot of information to have intermediate accounting in two quarters. That's just not a good thing. So intermediate accounting needs to be a full year, okay? And you'll see why in a moment. And what we're doing is we're taking what we learned in financial and expanding it to that full year. If it's taught right, it should be one of the most challenging courses that you have taken or that you will be taking. When I went to law school, I thought that my intermediate accounting class taught by Professor Henry Sander was harder than anything else I ever had. And it's by far one of the most important components for the financial accounting and reporting part of the CPA exam. The CPA exam, as all of you know, they've announced a change for 2024, but at least for right now, this is kind of holding true. It's very important. So beyond intermediate accounting, it's really advanced accounting. And that's why when someone tells me they're going to get a master's in accounting, I generally don't recommend it unless they got their degree from a foreign university and they want to work at a Big Four firm. Then you might get a master's in accounting because a Big Four might want to see a terminal degree from a US university. But in any event, there's really not a lot beyond intermediate accounting. So in terms of your success in intermediate accounting, and this is my second take on this video, and I'm doing a second take because I realized when I started listing these out, it's like, oh, wow, yeah, there's a lot. So if it's been a long time since you took financial accounting, between financial and intermediate, and you're worried about what do I need to have behind me, or what's going to give me the best success in terms of preparation. So every teacher teaches the class differently. For me, for the very first semester, it's really about, can a student go through and create financial statements? Can they do an income statement? Can they do a statement of retained earnings and then create a balance sheet classified? The income statement, you should be able to do a multi-step income statement. Do you know how to do adjusting journal entries? Journal entries are extremely important. I use T accounts heavily in my classes, and that's a lifesaver. So knowing how to use T accounts, adjusting journal entries, very, very important. Going down in terms of other topics, right? And this is, you'll see how this works in a moment. Accounts receivable. Do you know how to determine an ending allowance using the percentage of accounts receivable or an aging of accounts receivable? If you had an instructor who taught you the percentage of credit sales method, that was worthless because it's not, even though it might say it's GAAP, it's really not. I asked a FASB examiner a few years back. He said, nope, it's not GAAP. Also here too, writing off an account receivable, collecting an account receivable previously written off. Can you do the journal entries for those? How do we go through and prepare a balance sheet for accounts receivable, right? It's the accounts receivable less that allowance for doubtful accounts is going to give you accounts receivable net. Then understanding with inventory topics, lower of cost or market, FIFO, LIFO, weighted average periodic, and perpetual methods, right? How can we determine cost of goods sold and ending inventory? Also too, recording basic sales transactions, right? Debiting AR, crediting sales, debiting cost of goods sold, and crediting inventory. Also here too, property, plant, and equipment. Do you know how to record depreciation, right? Straight line, double declining balance, units of production. If you have an instructor that tries to teach you some of the year's digits, okay, what I want you to do is to ask that instructor is to have them show you a publicly traded company that uses some of the year's digits. Just ask them to show you that. And you'll get a good answer, which is, I don't know, or what's the SEC? Who knows what they'll say? Also, when you're dealing with property, plant, and equipment, how do you record an asset sale, right? How do I record an asset sale? What happens when there's a change in estimate for depreciation? With intangibles, basic things, what's goodwill? How do you amortize intellectual property? Statement of cash flows, very important. It's not really as heavy as it is in the second part, but chapter 5, as we'll see in a moment, covers the statement of cash flows. So you actually may see instructors putting that on. In the second semester, you're going to be dealing with more, and this is really coming from financial accounting, like basic contingencies, probable, possible, can we reasonably estimate it, can't estimate it. Bonds payable, do you know how to use a present value table and compute the discount or the premium? Using a present value table, very important, or understanding the present value concept. Lastly, stock transactions, common stock issuance, and treasury stock. If you're watching this video and you are freaking out about what I just said, I have a lot of different videos that are out there in financial accounting that will walk you through problems on how to do each of the above. Or just put a message in the bottom and I'll respond to you. So for your success in intermediate accounting, you want to be working, and this is in any class, we'll work backwards from the syllabus. What is determining my grade, right? That's in any class you take, that should be your approach, is keep your eyes on the prize, which is passing the class. If there's a lot of in-class participation, you better be in class. Also too, it's when and I've heard this from many of my former students, they will have instructors that are PhDs, and there may also be some CPAs that are out there as well. The worst possible education you could get in intermediate accounting, in my opinion, is an instructor who reads slides. And if you get a slide reader, meaning that they're not going through and doing problems, that's a problem. If the way I would do it, the way I teach now, is what I do is I ask the students to read the textbook, or better yet, I've made videos for them to watch. Those aren't public on YouTube. I have the students watch videos explaining the various different concepts. They need to be able to come to class and ready to work on questions. The way you learn accounting, or the way that I do it, is by writing out the solutions over and over again. That to me is by far what is most important. And that's why I provide the answers to the homework of problems I assign. If I go over a question in class, the students have the ability to go through and watch that solution. Okay, so Chegg. Um, I write my own exams, but if you have an instructor that's pulling stuff from, and I get why instructors do it, although I think it's pretty shameful in the accounting profession if they're not writing their own stuff. If they're using Chegg, you got to do it because that's somebody else in the class is doing it. I'm not telling you to cheat. All I'm telling you is that pretty much everything's on Chegg. And all of you know this. It's really unfortunate that that product exists, but I understand why it exists. It's because of lazy instructors and instructors that are not willing to go through and to change their exams because that exists. So I'm saying my piece. So again, my approach with any questions if I give an intermediate accounting exam, it's all problem based. I don't use multiple choice questions. To me, multiple choice is a cop out because of Chegg. And so for me, I like having problems. I like having students do problems. And even in this time of COVID, what I have my students do is they look at the Canvas screen, they write out the solutions, and their hands are about to fall off. I haven't gotten the carpal tunnel syndrome lawsuits yet. Their hands are about to fall off because of how much writing they're doing. But that's really what you need to do, in my opinion, to teach accounting. It is writing it out repeatedly. It's a skill. That's how you learn it. If you didn't do that, and this is something important too, if you had a really easy financial accounting instructor, you're screwed. And the reason why I say that is I've had students, once they transfer to a 4-year school, they're sitting next to somebody and they don't know how to do debits and credits. They don't know what a T account is. And so if you are taking an intermediate accounting class and you used multiple choice, you use Connect or one of those other crazy programs that are out there, in my opinion, that's not going to prepare you for success in this class. You have to go through and repeat the questions over and over again. And even when you study for the CPA exam, it's no different. It's how many times can you use Becker, Wiley, Gleim, Roger, and how many times can you go through those questions? So again, the most important thing you can do in business is acknowledge when you don't know something, or if it's been so long that I need to go back and basically review. The first step is acknowledgement. The second step is going to go back and relearn a lot of this different stuff. And trust me, you will feel better. Because if you've already taken the class, if you're reviewing it again for the second time, it's going to help you out. Every time you're doing a question in accounting, you're getting yourself closer to becoming a CPA. Okay. Now, let's look more specifically about, when you walk into intermediate accounting, it's like, whoa, there are 24 chapters. And this is the key. And I was indoctrinated on the 6th edition. So that tells you how old I am. Old man Bennet. Yeah, I was taking intermediate accounting. Let me see if I can get this right. It was in the spring quarter of 1989. That's how long ago it was, and a galaxy far, far away at UC Santa Barbara. So what are the differences, or what's new in intermediate accounting? Now, the one thing is you'll see some schools that'll take chapters 1 through 12, and then they'll take 13 through 24. That is insanity. Okay, it's not Linsanity like a Nick's Linsanity, but it is insanity. Why is it insanity? Because there is way too much new stuff. Everything back here is very, very new, and these are very hard questions. So one of the things that I've done in my class is I've kind of broken it up a little bit differently. The very first exam I give, and this was at the suggestion of Lacey Willis, who's a full-time professor at Chapman University, who's awesome, is that she said, Bennett, give your students an exam to make sure that they know how to do the basics, meaning that if I give you an unadjusted trial balance, can you make adjustments? Can you do journal entries? Can you prepare adjusting journal entries? Can you prepare a multi-step income statement? Can you prepare a statement of retained earnings? Can you prepare a classified balance sheet? Are you able to go through and do that? That is the first exam. I make it worth like 10% of the grade. If a student is unable to go through and to do that, though, it just means I do get some students that drop, but that's just because they realize, oh, this class is actually going to be taking some work. So that's pretty much exam one. My next exam that I usually give covers the income statement, right? And what are the new topics? You're going to learn about discontinued operations and how those have to be shown net of tax. What happens if you have a prior period error and you have to restate retained earnings? What happens when you have a change of estimate, error correction, non-operating items? And these are all different components of the income statement. For the balance sheet, there's really not going to be a lot new here. And again, all depends on your education. If you never learned how to do a classified balance sheet, right? That does not mean top secret. That means current and non-current assets and liabilities. It's going to be a nightmare. And that's why going back over to here, that's why you would need to really go through and brush up. If you've gone through though and done this, you're going to be pretty good though for all these different chapters here. The one other part of the balance sheet chapter is doing a statement of cash flows. Now, if you didn't get to that in financial, it's something that troubles a lot of students. It's pretty easy to do. And I have several different videos that you can go through and watch for free. Yeah, at least as of right now, I'm just getting their free videos. So you can go onto YouTube and watch those videos on terms of how to do a cash flow. The next concept here is present value. Now, you should have seen present value twice. You should have seen it in financial if you went through and did bonds. If you didn't get it then, the second time you should have seen it is when you were taking managerial accounting and we're doing a net present value computation. If you've never seen present value, watch one of my videos. That's what I would go through and do. Chapter 18. Now, this is where I've moved things around. And I did this in consultation with one of my co-faculties, Don Bradshaw at IBC. We looked at intermediate and we said, there's no way given this that we have to move things around. So chapter 18 is revenue recognition. Okay. And this is where you're introduced. I generally don't teach the 5 steps for revenue recognition in financial. It's something that I do in intermediate. So you're going to learn about those 5 steps of revenue recognition. You're going to learn about the percentage of completion method, completed contract method. How do you do various allocations? Those are going to be the new topics you're going to be learning. With cash and receivables, accounts receivable factoring. This is something that, again, if you're going through and how do you sell a receivable? How do you basically pledge your receivables as collateral for a loan? That's something that's new, or at least I don't teach in financial. Bank reconciliations. What's funny is that I didn't list it here. I should have, but knowing how to do a bank reconciliation is important. I started teaching it again in financial after one of my former students said, "Hey, dude, you didn't teach this. You need to teach it." It's like, okay. So if you haven't had bank recs, that's something that you need to know how to do. Inventory valuation. Now, I talked previously about FIFO, LIFO, weighted average, periodic, and perpetual. There's also going to be dollar value LIFO. It's not used that frequently, but it can come up on the CPA exam. Inventory errors. How do we record purchases net of that discount, which is a complete waste of time, but I'm listing it out here because it is new. Inventory and additional valuation issues, which is chapter 9, lower of cost or market. And the key here is what's different is like in my 1A class, I'll say, okay, cost is this, market is this, go through and do it. But here we're looking at, well, how do we determine market? And it's the middle of basically 3 different values. We'll also look at the gross profit of retail method of estimating inventory, right? Like the Human Torch came and burned down the warehouse, and then before Iceman could come and blow it all out and stop the fire, yeah, that's what we go through and learn how to do. We don't, though, do it with Fantastic Four people. Okay, hopefully they'll remake that into something good. Acquisition and disposal of property, plant, equipment. We're going to talk about interest capitalization, right? If we're doing a long-term construction project, what does that look like? Non-monetary exchanges, asset for asset, what happens? Depreciation and impairments. Now, again, if you've gone through and done all this here, it's going to be not as bad. If you're asked to do some of the year's digits, remember, ask the instructor, show me a publicly traded company that does it. It's not going to work out. And in fact, the reason why I can ask you that is I met an SEC examiner at a conference that was put on by Haskell and White, local Orange County firm, great firm. Asked them, hey, have you ever seen some of the year's digits? And he looked at me and he said, well, in the thousands of filings reviewed, I maybe saw it used 5 times, but they didn't call it that. So it's a purely theoretical accounting deal. If the CPA review courses give it to you, learn it there, don't learn it now. For intangible assets, we're going to learn a lot more about recording goodwill, goodwill impairment, research and development costs. Now, for this last one here for investments, this is a much more of a specialized area of accounting. If you were ever to go do accounting for, say, like a hedge fund, or for an investment bank, or for a securities house like a Goldman Sachs, you would be learning all about this. But it's definitely one of those things where, how do you do the accounting for call options, put options? What's the equity method of accounting? What is the fair value method of accounting? Cash flow hedges and fair value hedges, right? That's not the movie Over the Hedge, but rather what this is how if we're going to, if I'm Southwest Airlines, I think fuel is going to go up. I'm going to enter into a contract where I'm going to buy fuel at a certain price. So that's semester 1. Now, you may have revenue recognition and investments pushed to semester 2, but you just have to remember that's going to be a lot of fun to learn. But then semester 1 is like that much more doable. Okay, semester 2. And I have not taught semester 2. I have looked through the materials, and this is kind of what I saw over here. So this is kind of like what I would consider to be new. For current liabilities, if you're doing there's some new topics about warranties or refinancing debt. Non-current liabilities, long-term liabilities, we always call it non-current, effective interest computations, bond redemptions, zero interest bearing notes, trouble debt restructuring. Those are all going to be new types of topics. Again, if you know how to value bonds from 1A or from financial accounting, that's going to be very helpful. For stockholders' equity, you could be seeing liquidating dividends, stock dividends, treasury stock, dilutive securities and earnings per share. Now, this is where this is like the break off point, like right over here. Because once you kind of get through chapter 15, this is when you're getting into new territory. Convertible bonds, bonds with warrants, stock options, restricted stock, weighted average shares outstanding, stock appreciation rights, basic and fully diluted earnings per share. This is generally going to be new for most all of you. So this will take a little bit longer to do. Accounting for income taxes. You can have a permanent temporary tax asset, liability, temporary differences, permanent differences, net operating losses. Okay, so those are going to be newer topics for you. Pensions and other post-retirement obligations, everything is going to be new. Just because, again, that's generally typically not something you cover in financial accounting. If you did, send me a message at the bottom of this. I would love to hear from you and hear some more information about it. Leases. Pretty much everything now is a capital lease, meaning that we're going to record a leased asset and liability, including property rental over long periods of time, which is insane. Not linsanity, but it's insanity. Accounting changes and errors, right? So if there's a change in accounting principle or errors, we're going to learn about how that works. Statement of cash flows. You probably learned the indirect method in undergraduate or in the lower division. We're going to be learning the direct method, although not a lot of companies use it. But it was kind of funny when I was teaching at Chapman and I've taught some other places, and I said, hey, I don't think anybody uses the direct method. And then I get like 2 or 3 students who like send me like emails. So it was Katie, and she said, "Hey, Tchaikovsky, check this out." It was like Walmart or CVS. It was using the direct method. I'm like, wow, okay. And then lastly, full disclosure in financial reporting, going through and doing segment reporting. So if you have like multiple segments of operations and then subsequent events. So that's kind of an overview of intermediate accounting. And again, you want to do your research on the instructor. Um, I've had so many so many different people, like, just with you just want to figure out who you're taking the class with. Talk to former students of that instructor. Do your diligence, know what you need to do to be successful. And again, just remember, this class takes a ton of time. It's a lot of work. It's going to be harder than, if it's taught right, it's going to be harder than a lot of other classes you'll ever take. But that's the reason why we love accounting, because we get the JOB and we're going to pass that CPA exam, and then we're going to be ready to go on to amazing things as we are starting our accounting careers. So in any event, thank you for joining me here today on this brief overview of intermediate accounting. And if there are any other kind of videos you'd like to see, please feel free to leave a comment. Have a great one.